What's going on, team? It's Jacob from Jacob Veron of Trades. Now, today we're going to be doing a very simple beginner's video for people who do not know what options trading is. So this will be a very informative video on how to actually use the technology to actually trade option contracts and the basics of it and how it works and how it relates to the stock market and the SPY symbol and the S&P 500 and all of that. So we're going to be diving in. This is going to be a very beginner's basic kind of video, so if you're an expert, you already know a lot. There's no point of you watching this video. But if you're new to the trading world, to day trading, and you want to know what to do, you don't know about crypto, you don't know about stocks or about options or futures or any investing or trading at all, then this is the channel for you. So this is the perfect video. We will run through all it takes to learn the fundamentals of trading options, as well as how it'll actually be done on the software behind me. I'm using Interactive Broker for this video example. There are other softwares, including Questrade and Thinkorswim, but today we'll be using specifically Interactive Brokers, as well as you can see on the top monitor behind me, I have a Bookmap plugin. So this is basically a order flow visual tool to see what is exactly happening in the market and who is in control, and it breaks down everything. It's too much to explain in one video, so today we will stick to simply options trading, what it is, how it works, and how you can get into it, and basically that's it. Let's get to it. Okay, so the very first step is to simply type in the SPY symbol, SPY. So we type that in over here. And basically the layout is very simple. I'll run you guys real quick through my layout, how I check out the charts, how I look at them, and what I'm looking out for, and the kind of setups I play in, what I do on a daily basis every single day whenever I look at the charts, look at the market, and prepare to take a trade or not. Okay, so let's start off with, first we do an overview. First we want to do as much of an overview as possible. So overview matters for a couple of reasons. One, you get to see the bigger picture, right? Then the second reason it matters is you can see if we are going to be coming up into any possible support or resistance levels, or if we are currently in a state of the highest high, which is currently what is happening here. So we can zoom in onto the 1 day and see that it's been trending up, and then simply break it down by going in on the 1 hour. You can mark out supports easier this way. It's much more clear to mark out trading ranges and big supply and demand zones. We'll get into supply and demand zones in a different video, but basically want to be using as much of a big picture as possible in order to see where the supply and demand zones are, and where there's major consolidation and where there's major support and resistance. Okay, so typically on on an actual day trading session, I will typically, after I mark out supply and demand zones, if I decide to trade that strategy, I will be usually on a 15-minute to 5-minute chart here on the right. On the left, on the bigger chart here, we have just a 1 minute. So this is where the actual, scalping minute by minute trading actually goes down, is right here. I check out to see if there's any breakouts happening, and if there's anything that we can quickly take advantage of in order to make some money. If there's any moves to capture, you will see them on the 1 minute if you are scalping. So if you're doing very quick day trades, the 1 minute is definitely one of the most important time frames to be on. Now moving over to the left, we have a couple things here. We got this like blue, purplish kind of little square area here. Simply put it, this is an options chain. So this is basically where we get to go for our calls or our puts. And to put simply, calls is if you are betting up, you're betting for the green bars, you're looking to bet that the market will go up, you're gonna go with calls. If you're predicting that today is gonna be a bearish day, the market's gonna crash, it's gonna be red bars, you're gonna go with the puts. Very simple. So calls is up, puts is down. Simple and straightforward, nothing really to it. So, and then either than that, we also have expiration date. That's the next most important feature of the contract. So typically as a day trader, you're gonna be trading, buying and selling within the exact same day. So literally 0 day to 1 day is the best options for us day trader scalpers. To simply put it, the further up you go in the highlighted section, the further into the money you go, the more volatility you expose yourself to. So meaning more risk and more reward. So it's pretty straightforward. You either play more of a timid game, more of a laid back, lower risk, lower reward entry game of doing just in the money or a bit out, or you can go really into the money and have much more volatility to work with. So typically I trade just in the money or one strike price out of the money. And to put it simply, how do we go along with setting up our trade? What's an example of an edge? So simple edge every single day is to simply mark out the opening print. That's all it really takes. So every single day you wake up, you check out the market, it opens up at 6:30 here, right here, sorry, I'll delete this. And you simply mark it out. Typically I give it a distinct color. I will give it a red color. And then I will let the market generate its data throughout the day. I'll mark out anything substantial, and I'll make sure that these next lines, supports and resistances, are based off of actual reversals that occur. So I'll be just watching, scouting the market, seeing what's going on. So for example, obviously this is hindsight. In hindsight, you can see and talk and tell everything completely different than when you're actually in the game, in the minute to minute chart viewing section. But in hindsight, you can see market open, we go below opening print, which means that we could potentially crash for the day. However, we hold consecutively for the next 10-15 minutes. We make it back above opening print. Simply what I do is I set out the opening print. If I see, again, the other important feature is supply and demand. So we need to be somewhere that has a lot of consolidation and a lot of volume. If there's not a lot of volume, we simply will never have the price go off into any overextended period. We need to be letting the price run as far as it can, essentially, to make sure that we are taking the best possible risk per reward trade. So to put simply, we can imagine if this was a supply and demand zone, if we were over here going for calls at the bottom, we would see that it holds the zone. We would see that it does not want to go any further, and we would simply go, once we see that we're above the opening print and above, let's say, this imaginary supply zone, pretend like this is one. Here, I'll do a little rectangle here to make it easy. So we're gathering some supply, and then we can simply go to the left, click on a call. The chart will update here, and then we simply go over here, make sure that we are clicking on buy, that it's on the buy in the blue, do market, buy for market. I typically will trade 2 contracts at a time if I'm just trying to get comfortable, and then I'll go to advanced and I will drop a stop loss, for example of 1.37, profit, let's just say something like this. And then you'll click submit, and then what will happen is you'll actually see an order appear in your order entry and portfolio tab up here above the actual SPY options contract. And then from there, you can see your P&L, how much your money you're making or losing currently as the contract is open and mid-trade. And then you'll also have lines such as these here that will represent. These lines here will represent your stop loss and your take profit. You'll have 2 separate lines with this kind of order entry that I'm setting up here with this bracket order. I'll close it for now so I don't accidentally click buy. But yeah, basically you'll be able to move up your stop loss as tight as you want, give it as much space as you want, and same as your take profit, you'll be able to move it and accordingly and adjust it as the market goes on and you capture your move or you lose from your move. Either way, you'll be able to at least control your entry and your exit precisely very well with the software. There's a lot to cover for SPY options trading, so I definitely will drop another video as soon as possible and just keep diving deeper into the subject to break it down fully. But I just wanted to go through a very basic, simple example of what it looks like on the actual software interactive broker trader workstation, and just how it's actually done, how the overhead view, the bigger picture looks, how the 1 minute picture looks, how supply and demand just slightly works a little bit here, and as well as how the actual contract reflects back on the SPY option and how the actual option chain works. There was a lot we covered in a short amount of time. The very last thing I will say is basically As you can see, SPY on its own is worth $564. Now, what does that mean for these contracts here? Well, these contracts have their own value. So basically, we click over here, let's say for a call, over here for 0-day expiry, it's already an expired contract, but for example, it expired at 50.55. That means it expired at $55. So basically all these decimals mean is times it by 100 and you have the dollar value. So as you can see here, you could have bought in for, let's say 55, and you could have sold at a peak of 120, so 1.2, 1.19. Approximately like that. So that is exactly how the actual option contract works, where your money is put in. You can buy into this for $55 and sell it for about 120 if you captured this move. And this all is a result off of the SPY stock itself moving. So if it moves by simply $1, that can equivalent to $100 on the actual SPY contract. So it's very simple. We'll dive deeper into it on another video, but yeah, that's basically it in a nutshell, and how the value of it actually holds itself within the contract and how it all correlates to one another. It's basically a mechanism of generating money in a very quick amount of time. You can risk or get a good reward very quickly with only a few dollar moves from the actual SPY stock itself. So I hope you guys enjoyed the video. I'll definitely drop more videos in SPY options trading. I'll dive into futures trading as well, and I will also dive into different types of setups, different types of technologies, and all sorts of plugins as well. That's it from me. We've covered a lot in this video. I know it was quick, but we did cover quite a bit in a very short amount of time. I'll definitely be dropping more videos in the future, and I'll make sure to be much more frequent with the uploads. All right, take care.